Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to a new episode of Markets Tomorrow, where we look at what happened in the markets during the day and then look forward how we can plan for a trade tomorrow. This is analysis for January 7th, Friday 2022. So we had a slight dip in the markets today and it was an expiry day also. So let's see what happens. So this is a pre-market analysis where we're looking for January 7th, Friday tomorrow. We'll be looking at all of these parameters that you see on the left side. And we would also have additional data analysis on different aspects that you see on the right side, and then we'll wrap up some actions. We're a little late for the recording today, so it'll be moving a little faster. Excuse me on that. So what you see here is that after a trending 9 to 10% of up move, there is a dip that happened in the Nifty here, and this is a kind of a hammer pattern, small body doji. Not really a hammer, but looks almost like a hammer, which indicates that the recovery, the big size can indicate the recovery that happened. And BANKNIFTY is an inside bar. That's a big bar, and the small bar just indicates consolidation. Inside bars often indicates consolidation. So this is closed below the previous candle's low. This is here that does not happen. So Nifty is more bearish today. And this there is 179 points, 1% of gap down that happened in Nifty. And attempted recovery happened and the small body bearish ended up. BANKNIFTY is 0.5% to 205 points down, and it attempted recovery and formed an inside bar like you see here. So intraday this is the price action. It gapped down and then recovered half of it. So it was a 1.5% of nearly 1.5% of dip and then recovery of half of that. But BANKNIFTY did better. It was a 1.5% dip and then recovery was double of that. It completely recovered a V-shaped recovery. So that was the reversal that happened in the expiry day today. Bollinger Bands, if it's volatility, you can see that the bands are expanding on both sides. And upside volatility expansion you can see clearly, and it halted today. It paused today. Here also you can see that it is expanded both sides. So volatility has expanded, but overall, if you look at it, you can, it could be a consolidation with the high volatility. Is what we can make out from the Bollinger Bands as of now. Support resistance levels, if you see, right? So we are at the first resistance can be seen at 17,950 to 18,000 levels, and above that 1800, and then above that 18,200, then 18,350, 400. Downside resistance would be 17,500 to 17,600 that level, and then below that 17,350 to 17,400, below that 17,200 to 17,300, and then 17,000. Similarly, BANKNIFTY, the resistance would be seen at 37,700, 37,800. Thereafter you have 38,000, then 38,350, 38,500. Downside you have supports at 37,000, 30,000, 37,400, and then 37,000 levels, and then below that 36,300 to 36,700, which is Fibonacci 38. And then after that we have 35,600 to 35,900 levels. So that is the support and resistance from the BANKNIFTY. Let's move on to see the momentum. Momentum is seen to be bullish, continues to be bullish in the Nifty as well as the BANKNIFTY. It's above RSI 60, and then you can see that there is a range shift that has happened. That means from the sideways it is confirmed, and if in case there is a up move that is happening tomorrow, it can be very, very bullish. So that range shift kind of pattern is seen in the BANKNIFTY also, more or less. In the medium term, so the divergence, you can see a 15 bar divergence is there. It has met target, both Nifty and BANKNIFTY. So now there is no other divergence that is seen, but there is a range shift, which is a bullish indication. It is also very good more potential is there in case this momentum does not dip further into the sideways back. Right? And medium term also it's bullish on the momentum. No divergence other than what is already met the target. ADX indicator is showing that namely positive on both Nifty and the BANKNIFTY. Okay? It's bullish, continue to be bullish, does not cross our back, but yeah, and the strength of that also, as indicated by the green, is also moving up. So DMI positive is increasing trend strength. Nothing has happened from yesterday, nothing much. So volatility wise, 4.5% further it went up and settled at near to 18 as the VIX. India VIX. IV is 17.3 and IVP also has shot up to 58.3 level. So it's still within the 50 and 20. Anything over 20 you have to be careful. Today was a further up move. Yesterday it was around 7%. Today it is 4%. So that is a good up move that happened. Nifty suddenly shot up from 16 to 18. So it is what happened today. Open interest analysis is showing that highest put rating is 17,500 and then 16,500. This is for the January 13th expiry, so the data may not be that much relevant because its trading activity will happen only from tomorrow. Similarly, Nifty resistance seems 18,000, after that 17,800. 1.02 is kind of bullish PCR, and today's open interest short build-up is what we've seen. BANKNIFTY 37,000 and 36,000 is where the highest put rating and support is in, while the resistance seen at 38,000 and 37,500. 0.83 is also not fully bullish but not bearish either. So that's short build-up that is seen in the futures build-up of today. So that's the open interest analysis. You can see, correlate this with the levels of the support and the resistance, and then we can make sense of it. So it was a red, more or less. Red. ICICI Bank and certain banks did well. Airtel did well. Titan and Bajaj Finance also did well. So more or less it was it was deep red, and then some recovery happened later on. That's what happened. So total performance, IT went down further to 1.5. So IT did not perform yesterday also. Today also it went further down, and the momentum also is sideways now on the short term. So let us wait for any stock picks. Metal is red 0.5%. Pharma is 0.6% down. FMCG is 0.7% down. Realty is 1.5% down. So all of this momentum also is sideways. So just have to wait. But auto did shoot up 0.5% only, but the momentum is now in short term bullishness. And you could pick the kick the shocks with the cautious bullishness because the medium term momentum is not fully caught up. So except auto, all of the other sectors are seem to be down today. Right? It was much more down, but it recovered later. That's sector performance. Now this is the worrying thing. So Fyers, you can see that they sold 1926 crores, 1926 crores. So they have restarted the selling once again, which is worrisome. DS on the other hand continue to be buyer. So this is the institutional participation details. Dollar took the support and then bounced up on the USD INR currency pair. So these are the 74.5 kind of levels. It's a major support zone, but it was dollar weakened a little bit today. The dollar index, you can see that it is consolidating. It is at the same zone today. Also, it was a kind of indecisive inverted hammer kind of pattern. Crude is shooting up above 75, 78. Now it is going up to 79 level. This is a concern. Crude oil shooting up, and the momentum is also higher. Trend also has crossed over. It is going out of control. Above this resistance zone, if it is not falling back here, then we have problem. Gold has tipped again after one more attempt failed when hitting the same old resistance, and now back to the resistance zone. It is in an inverted. It is in a cup and handle portion right now. Long term may be bullish, but it's consolidating and not moving anywhere since last almost a year now. US markets had a big down day yesterday following some Fed meeting related event. 400 points down. That is what made the entire Vauld, all other markets also down. So we'll have to check these three markets in the US: Dow Jones, S&P 500, and the Nasdaq. All of these, how they perform tomorrow, and how the SGX also we'll have to see. And European markets we'll have to see at 12:30 kind of time how they're performing for taking positions in the afternoon. Externals, GMR infrastructure is kind of breakout, and there's a green day today, and it could give further up move. Momentum is good, volume is good, and the trend is also good. Asian buying is at a breakout zone, and looks like it is broken out today. And if there is any move above the high of this, then it can be a continuation of the trend, a continuation of the rounding pattern breakout. Its momentum is good, trend is good, volume is above moving average. So Asian paints and GMR infrastructure. Now, wrap up is that the cautiously mildly bullish, very mildly. Why mildly bullish? Because support resistance looks good, bullish momentum is there, bullish trend is there, and why cautious and why mild? Because institutions have started selling again. So overall, if you see Nifty and the Bank Nifty, 9% of recovery, 11% of recovery in Bank Nifty has happened, but and the momentum and trend also has improved. Today's price action, not institutional selling, not sure whether it is because of expiry that happened or some Fed tapering event news, whether market is completely digested that or not, we'll come to know a little more. Now VIX is rising up again, and anything above 20 you have to be cautious. So cautious bullishness, mild bullishness, cautious and mild bullishness is what portion sizing should be based on, because it could, the price action that broke out from the previous swing high could turn out to be false if it is further moving up. So any price action that is above the yesterday's candle high would be confirming that the bullishness rally is going to continue. Until then, there is some consolidation that maybe that can be expected. Option trades always use vertical spread. That's something that I tell every day. So weekly and monthly option strategies, risk-defined strategies has to be used. So that's a wrap up. If it helps you to form your own view, consider hitting the like button and sharing to friends so that it helps us have more subscriptions. Thank you so much, and we would continue to come out with this regular analysis and additional useful educational videos on trading and investment also in the coming weeks. Thank you so much. Happy trading, happy learning. Bye.